Welcome everyone. Welcome to Decoding Markets in 3 moves with Rohit Srivastava, India's top market strategist. In each quick episode, he breaks down key market questions and reveals 3 simple, actionable trading or investing strategies to make you a bit more smarter. Whether you are a pro or just starting out, learn to trade in a smarter way. Uh, welcome back, sir, to a new episode.
Happy to be
And
back.
yes, just before Diwali, tomorrow is Dhanteras. Everywhere there is lights around the corner. So, what is lighting up the stock market?
Yeah, lots of lights in the market also for the last few days. So whether we call it a Diwali rally, a pre-Diwali rally, a Trump truce rally, you can give it many names. But it's the end of negativity. A lot of the negative stuff has gotten discounted, and we are slowly starting to discount positive things. Hopefully, that momentum of positivity will continue. But last few days essentially been a lot of the initial move is a lot of fresh buying and short covering, both things happening. uh, Eventually it should mean more buying. The panic should be over, and it looks good because on the weekly charts we have some interesting setups that have developed. The weekly RMI last week turned bullish for Bank Nifty, and the weekly RMI for Nifty itself has given a bullish crossover this week. That is today, confirmed. Good news ahead of Diwali. Although there's one more trading day left before Diwali, I think there's that whole confusion between 20th and 21st because
Yeah,
Amawas is
that
starting early. So some people are saying 20th is Diwali, but the official stock market holiday is on the 21st. And so that's created some amount of confusion.
so let's get moving with the questions for today's. So, starting with the first question, sir, what technical signals would confirm the start of a five-wave decline in USD INR, and how does the expanded flat correction pattern influence the next move in the currency pair?
Yeah, so it's a very complex pattern. When we talk about expanded flats, it means that sometimes prices go to a new high, it looks like a new trend, and then it suddenly falters. And that setup would confirm further if we break below the 8760. I think that is the level 8760. Below that, but I don't think we broke that yet today. Even though the USDINR was down a little bit, we're still on the edge on that line. But that is the setup is showing that possibility, especially if the US dollar itself, the dollar index, continues to fall, then the DXY, the USDINR can end up following the path of uh, the DXY. So yeah, so there's a good chance, and that would mean the currency strengthening for months to come. After all this weakness, and it also means, if at all that pattern is playing out, that India and US have achieved some kind of truce, because a lot of the recent weakness was really related to tariffs and the impact on current account deficit. So, if we are able to sort that out, it also has a fundamental underpinning that maybe we are getting to the point where the currency problem, I mean, the tariff problem between India and US reaches its final goal of some kind of a agreement. So yeah, we are still there. The levels, yeah, it's around 8760. That's the support. Still watching. Didn't break today. In fact, USDNR was slightly down in the morning. Now it's slightly up. So let's see whether we get that break maybe next week. But yeah, that would be a sign of something changing um, on the macro
Understood.
front. Mm.
So, moving to that second one, how is the uncertainty surrounding global oil supply reflected in the recent price movements, and what role does the forthcoming Trump Putin summit play in shaping market expectations?
Oh, it's a big one because sort of sorted all the other potential wars around us, and if we have sort of sorted that, it's already reduced the war mongering pressure on oil, increased supply from the Middle East. The last thing would be getting the Russian supply onto the market. So if any kind of deal, even if it starts with only a ceasefire, if nothing else, between Russia and Ukraine, is going to have impact of getting oil to sell off. And if oil sells off, I mean, it's already down. It's not exactly going up, but it keeps the pressure on inflation to the downside, and that means we can actually lower interest rates, and that means a weak dollar, strong commodities, reflation, borrowing and investment demand, so many things. It means so many different things. So that's what the oil trade is all about. I think the US needs to get its own interest rates down, and it needs to keep inflation pressures away. And Russia and Ukraine are the last part of that battle.
The last piece of the puzzle that is not getting fixed till now. Moving to the next one, sir. It's from the India charts analysis. So, according to the analysis on the India charts, what is the projected level for the Nifty Metal Index in the next month or two, and what does the notation 3 = 1 signify in this context?
So, when we think about Elliott wave analysis and we're talking about Fibonacci levels, uh, there's a tendency for third waves to be extended. And it's a tendency. I mean, there's nothing like a certainty. But if it is that tendency, what it does is that it means that if the third is there's again a guide. It's not a rule, but it's a guideline that not all three impulse waves extend. And so if the third ends up extending, then we say, okay, the fifth will not extend that much. And so it might only be as much as, say, the first wave, which was smaller. And that's why the notation of 3 = 1 or 5 = 1 really comes in. That if one of the waves is extended, possibly the other one could tend towards equality. Uh, in either case, when we are saying that a fifth wave is unfolding at some degree, we are saying that it's a bullish trend that is going on, and I think it's just the fifth of third. I mean, the metals bull market should have a long way to run. We are in very early stages of that, and I think what I may have spoken about, I'm also not sure whether it was a fifth of third or I was simply saying third wave, which is even smaller degree. So I was not even going into the long term maybe. But what I'm saying and showing right now on the chart is essentially a longer term chart of the Nifty Metal Index. And there's a good chance the way it has developed that this is just a series of early first waves. We're just starting a third. I know this is sounding hyper bullish, but that's just my sense of it. The less crazy alternate is to say this is 1, 2, 3, 4, and 5, where the third wave is shorter rather than being extended, it's shorter, and the fifth wave will be even shorter, or just truncate. It's unusual. I mean, it's not impossible to get that, but it's unusual. It's not a common feature to get, especially longer term, to get a this kind of a structure where 5 is less than 3 is less than 1. So yeah, I'm actually going with this very hyper bullish wave count for the metal index, where I've marked this as 2. Okay, not 21. I'm sorry, 2, and again 1 2, which means we have a series of third waves that are going to follow, and that will be much bigger once it becomes apparent to the world that we are actually able to weaken the dollar and lower interest rates. But yeah,
The
just in terms
entire
of levels, since you are the upper end of this channel currently is around 14,200. Tell me, what are you saying?
So I was just saying that the entire scenario is revolving around the dollar just to make it weak, to just pay off the interest. Is it in that format the main actual goal?
To pay off, to write off the debt. Actually, it's not even write off. It is to inflate the debt. Okay. Inflate the debt relative to GDP. So GDP is just a number. Debt is also just a number. And if GDP is not growing at a very fast rate and you're expanding your debt all the time, the only thing you can do is bring down the debt to GDP ratio. And one way to do that is have some inflation, because the GDP is nothing but nominal GDP, which is priced into production. So if you increase the prices of goods and services, you end up increasing nominal GDP, and thus the debt to GDP ratio comes down. So it's all math at the end of the day, but to make that happen, you have to actually take economic measures that are manageable, which means you get manageable inflation and not hyperinflation. And you get cycles of inflation and disinflation and inflation and disinflation, several times till you achieve that goal. And it has happened in the 1940s and 60s, so it's nothing but a repetition of that.
Got a clarity about it. So that's it from my side regarding the questions.
But it's one thing to study history and say this is what happened in the 1940s and 50s, and it's another thing to be living through it in real time. I mean, historically,
Right.
oh, this happened in 30 years, oh, so it will happen again next. But try living it on a day-to-day basis. 30 years is a long period of time. So we start anticipating. When we study history, we say, aisa hua tha, aisa hoga. It's like it will happen tomorrow. It's not going to happen tomorrow. It's going to happen slowly over a period of time, and therefore, at every stage of that process, we question whether it is working, not working. Can it happen? Can't it happen? What if it blows up? But knowing what they are trying is important, because you know what the end result will be if they are successful.
Hmm. Got it.
And by they, I mean the government.
Hmm.
So yeah.
So let's get going with the
We don't have a lot of
questions.
questions today, and nobody
Yeah,
for
we.
makes again.
So I just wanted to make one announcement to the people who are watching right now. So it's a humble request to everyone who have joined our live from Twitter. So you guys are like all free to just ask your questions because we are getting the maximum traction from there itself. So if you guys are facing any technical issue, is it any problem that you are facing, any hindrance, any hurdles, you guys can reach us
You're
to.
breaking up. Shubhajit, you are breaking up.
Just a moment, sir.
I can't hear you, Shubhajit. You're breaking up. Your net is lost. So I think till he is back. Let me just look
Yeah.
at.
Am I am I audible now?
You are audible. Mahesh is saying his voice is clear. I wonder, is it me then? I don't know.
Ah, I think so. Then there might be a network issue from your side. So
That's
yeah,
possible
just
mine also because my Geo is down and I'm using the hotspot. So even I could be the problem. Yeah.
so just a quick announcement that I wanted to make to you guys. So we are getting the maximum traction from our X platform, that is formerly known as a Twitter. So if you guys are having any issue, any problem, any technical glitch, you guys can actually reach to us for, and we will solve it for you guys. But as we are seeing that almost 500, 600 people are joining it, so making like no question from X is it seems like you guys are understanding everything. So it's very good. It's really good that we are able to make you understand all these things. Yeah. And if you guys have any issue, any problem, any question regarding anything regarding our episode, you guys can just ask your questions over here in the chat. That's all. Thank you. So should we move with the questions?
Yeah. Please.
We got the first question from X. So starting with the first question is from Akash Soni. Hello Rohit sir, any course available to learn? Okay.
Yeah, we have a very extensive mentorship program in terms of how to, uh, how to do your own analysis, how to do your own research, use Elliott wave analysis, technical sentiment, everything together to find the best trade ideas and learn to do it yourself. It's very comprehensive, and it's very extensive also. So you can get in touch with my team for the mentorship program. Just go to Indiacharts.com. You'll find the details there. You'll find Soumya's number there to contact, and you can get on a call with her to understand it in more detail.
Yeah. Or
And of course,
Akash,
I'm
you
there
guys.
in that segment. So once you join that, like you said, get in contact. You just get in touch with them, and they'll let you know how.
You can directly just DM to sir also on any of his social media platforms.
Yeah.
Yeah. So moving to the second question. So you always tell FI not coming to India because of LTCG. So because of that, no trending move in index come. Our indices trade in range in long term, no return, like Japan. Is it possible?
No, there's a lot of domestic flow. The domestic flow is overwhelming the FII outflow. So don't underestimate that, and which is why our market is up. It's not in a range. It's in a range for the last year, but it was in a range for 1 year, even in 21, 22, and then we rallied from 18,000 to 25,000. Now again we are consolidating at this level, only for something bigger. Only for something bigger. You will be surprised how bigger that big is eventually. If somebody tells you when times are bad like today that something big is coming, you look like a fool. And the problem is the what big is coming is bigger than you can imagine. So that's just what the structure tells us. Will FIs eventually come in because of that? Maybe they'll come in because there's growth, or maybe they'll come in because we change our laws around it, LTCG, because we still have a bad CAD situation, a bad currency situation. So unless we solve our currency problem, I don't know how they could have brought in LTCG on foreigners just to please domestic investors, or maybe to keep valuations down or keep bubbles from happening. When they saw that so much domestic flow is coming, government thought, "Kichalo, let's tax the foreigners." But in doing so, you end up risking the currency, and that's what we have done in a sense, because you've not really solved your currency problem. But it's a calculation. I mean, it's some kind of a risk reward calculation, or risk that you take, calculated risk that the government has taken on that front. But it doesn't matter. FII flows is not the only animal in town. Our markets existed before FII flows and after FII flows. The Sensex went up 100 times before FIs came to India.
So moving to the next one is from Deepak. From a Nifty peg perspective, do still have a lot of time correction now? That price correction seems to be done.
What if the peg changes? What if growth moves ahead? Then what will you do of peg? So when the government cuts taxes, cuts GST, lowers interest rates, spends more on capex, we are in a sense trying to stimulate growth. And if that growth shows up at some point of time, then the peg ratio argument goes for a toss. So far, what is happening is market is remaining constant at current growth levels, which means the Nifty has been constant for the last 3 years.
So your voice was not audible. The last part, what you was
I
saying.
don't know if that was me or you, but possibly me. So I don't know if you heard what I said.
So the last part it was not clear, sir.
Yeah, so I was just saying that the Nifty PE ratio has been flat for the last 3 years. Okay, which means that whatever growth has come has not been priced higher, which is pretty unusual. It's been constant. But what happens if growth actually picks up? So
Yeah. So going for the next one. Yeah. It's from Mahesh. From last 2 days, daily and daily average momentum swings are falling, but Nifty gave a breakout. This indicates broader market is not participating currently. Will it catch up once Nifty consolidates?
yeah, there are phases of mid and small cap, large cap. You're right, and they do catch up. They do catch up. The back and forth helps because then that allows more room for the Nifty to move because it doesn't get short term overbought as it would if everything moved up together. It also, you will notice this is a different behavior when you have a strong bullish trend versus when you have a bearish market in which markets rally, then fall, then rally, then fall. Versus when you have a trending market on the way up, there's slightly different behavior. So this kind of behavior you can go back and check more than a year back when the markets were still bullish, and you will find a lot of examples of where markets went up on the swing, diverging or not going up that much, and eventually the market comes down and it gets oversold, and then again it goes up, and then again it diverges. So that process keeps repeating over and over again.
So moving to the next one is from Suri sir. Is there is a divergence between
It's the
daily and
same
average
question.
swings?
It's the same question.
Yeah. Yeah. Going with the questions from X. I want to know what can America do going forward? Stock market rising, gold rising. What can happen with us debt? As you told, they can try to increase price, but will it also not easy?
Oh, it's not easy. It's very easy. They spent a lot of money after COVID and did end up with inflation. Right now they are even willing to cut rates when inflation is high. So it's a regime change that they are making, and very decidedly so, because they need to cut interest rates. They have too much debt, so they don't have a choice. It's not like they have a choice over here.
So going with the next one.
The only thing I expect to answer that question more clearly is I expect performance to shift away from US to other markets. I mean, I don't think US will do very badly, but other markets in a weak dollar, weak low interest rate environment, emerging markets, Europe, and various other places will start doing better at some point of time. Except for the AI part, right? That's the big story, which is still US centric.
So should I go to the next one? So should we move to the next question?
Yeah, sure. I think on those all.
Next questions. Why small and mid cap underperform relatively this week? Is there still some downside left there?
I mean, that's very stock specific. See, overall, mid cap, small cap, most of the selling, I think, is complete. Some stocks have even gone to 52-week highs month after month in mid and small caps. Okay, so the real question is not that. It's like Nifty was underperforming the mid caps. Now Nifty is catching up. Nifty is catching up with the performing part of the market, not the other way around. And so now, while Nifty is playing that catch up, the large caps trying to catch up with what some of the growth stocks have been doing, that the growth stocks are not going up that fast because they are allowing Nifty to play that catch up. And therefore, it is actually looking like, oh, the broad market is underperforming. When actually speaking, it is the large caps that were underperforming and are catching up with the mid caps. So it's it's just how you look at it.
Next. The next question. So it's only large cap rally. Why mid and small cap lagging?
The
Is
same
it only
question here. This lagging is only for a day. On a 3-month basis, large cap is lagging. On a 3-month basis, mid caps have gone to all-time highs. It's the same question.
the last question? It's a question
And on a
regarding.
1-day basis, why is it happening? It's like I would be God to know the answer.
So it's the last question for today's session.
The Strike mobile
Well,
application comes in a month or so. Hopefully in a month, if not two. But somewhere in that time horizon, a lot of the work is done. A lot of the screens are ready. If the coders are able to move fast enough, it will be out sooner. But yeah, at least a month, not less.
so is this problem going with my internet or like, guys, am I audible? Rohit sir? Yeah, just yeah, it's a problem from Rohit sir's account. Yeah, just give let me give him a text regarding this. I think so. He just dropped the call. We'll be joining in a moment. So yeah, I got the confirmation from Rohit sir. There is a network problem at his hand, so we are just ending the session over here. Thank you everyone for joining. We will be meeting after the Diwali. So happy Diwali to each and every one of our viewers and our subscribers. And thanks a lot to join our live. Let's meet after Diwali. Be a very like wish you all a very happy and safe Diwali, and a very happy and safe trading as well. So till then, take care, trade safe, and trade with strike. That's all. Thank you.